This content is for educational purposes only and is not financial advice. Any results shown are illustrative, not a promise or guarantee of similar outcomes, and individual results vary. Futures trading involves high risk of loss. If you day trade S&P 500 futures or NASDAQ futures, one of the biggest challenges is knowing exactly when to enter, where to place your stop loss, and where to take profits without guessing. In this video, we break down a complete rules-based futures day trading strategy using the Day Trading GPS Futures Daily Key Levels Indicator and Ribbon Indicator. You'll see how objective key levels, market structure analysis, entry confirmation, predefined profit targets, and structured trade management work together within a repeatable trading framework. One NASDAQ futures trade. $2,575 in profit per regular E-mini contract in less than 20 minutes. But the profit itself is not the focus. What matters is how the trade was identified, executed, and managed using a structured, rules-based trading framework built around two indicators: the Day Trading GPS Futures Daily Key Levels Indicator and the Day Trading GPS Ribbon Indicator. There was no guessing, no subjective chart analysis, and no attempt to predict where the market might go next. Instead, the trade was based on objective key price levels, clearly defined confirmation criteria, predefined stop-loss locations, and predefined profit target objectives. The result was a repeatable process designed to remove emotion, reduce subjectivity, and provide a structured framework for decision-making throughout the trading session. In today's video, we're going to break down the complete Futures Daily Key Levels trading strategy, including the market setup, the signal that identified the opportunity, the confirmation required for trade entry, and the step-by-step management of the position from entry to exit. We'll also cover an advanced trade management technique that can be used to lock in profits at one of three predefined target objectives while allowing a remaining runner position to capture additional gains when the trend continues and momentum remains confirmed by the ribbon indicator. Let's get started. At the close of the 9:34 a.m. candle, NASDAQ futures closed below the bull-bear key price level, which was $30,069 for today's session. At the same time, the ribbon indicator turned fully red, and the lower ribbon bands began expanding away from the ribbon base, signaling increasing bearish momentum and trend confirmation. With both conditions satisfied, a confirmed close below a major key level and bearish ribbon confirmation, the requirements for a short trade entry were met. The short position was entered by selling at the bid on the close of the 9:34 a.m. candle at 30,034.25. During the 9:46 a.m. candle, NASDAQ futures reached the minimum 1.5 level profit objective for a standard day trade, arriving at the mid S1, S2 level. From the original short entry, the move measured just over 128 points, producing a profit of $2,575 per regular NASDAQ E-mini futures contract, or $257.50 profit per NASDAQ micro futures contract. So how did we know where to enter, where to place the stop loss, and where to take profits? Let's break it down. To understand the trade, there are only two things you need to know. First, before the New York RTH session begins, the Futures Daily Key Levels Indicator automatically analyzes both the overnight and pre-market trading activity to identify the most important key price levels for the upcoming session. Then, on the very first tick of the 9:30 a.m. New York market RTH session open, the indicator automatically calculates and plots a complete framework of key support, resistance, and directional key levels directly onto your chart, providing a structured roadmap for the entire trading day. Second, every trade entry has two required components. The first requirement is a confirmed candle close above or a confirmed candle close below one of the indicator's key price levels. This can be either one of the indicator's primary levels, including the bull-bear key price level, the main resistance levels, R1 through R10, or the main support levels, S1 through S10, or one of the five contextual key levels: pre-market high, PMH, pre-market low, PML, yesterday's high, YDH, yesterday's low, YDL, or yesterday's close, YDC. Only after price has established itself above or below one of these objective reference levels does the trade become eligible for further confirmation and potential entry. Second, there must be confirmation from the ribbon indicator in order to enter the trade. One of the most important main key levels generated each day is the bull-bear key price level, also known as the BBKPL. The BBKPL acts as a major decision point during the session. When price closes above it, the market is showing bullish strength. When price closes below it, the market is showing bearish strength. However, a candle close above or below a key level alone is never enough. Every trade entry also requires ribbon confirmation. For a bullish trade entry, price must close above a key level and the ribbon indicator must confirm with an all-green ribbon. Ideally, the upper bands of the ribbon should be starting to separate from the ribbon base, showing momentum expansion. For a bearish trade entry, price must close below a key level, and the ribbon indicator must confirm with an all-red ribbon. Ideally, the lower bands should be pulling away from the ribbon base, showing momentum expansion. No ribbon confirmation, no trade. Now let's go back to today's setup. At the close of the 9:34 a.m. candle, Nasdaq futures closed below the bull-bear key price level, while the ribbon turned fully red and the lower bands of the ribbon began pulling away from the base of the ribbon. That provided both the signal and confirmation required for a bearish trade entry. For risk management, there were two stop-loss options available from the indicator to choose from. The first was the tighter stop-loss using the QL level above the BBKPL. The second was the standard stop-loss using the first midpoint above BBKPL, the mid-BBKPLR1 level. The profit target framework is straightforward. For a scalp trade, the target objective is a one-level move in your favor. For a regular day trade, the target objective is either a minimum 1.5 level move or the ideal 2-level move in your favor. Since this was a bearish trade triggered from the BBKPL level, the scalp target was the S1 level. That target was reached during the 9:40 a.m. candle. The minimum required threshold 1.5 level target for a regular day trade was the mid S1 S2 level. That target was reached during the 9:46 a.m. candle. The minimum ideal move threshold 2-level target for a regular day trade was the S2 level. That target was reached during the 9:56 a.m. candle. And the key takeaways. The entry signal came from a close below one of the indicator's key levels for the session. In this case, it was the bull-bear key price level. The confirmation trigger for entering the trade came from the ribbon indicator. The stop-loss locations were predefined before the trade was entered. The profit targets were predefined before the trade was entered. And the trade management process was predefined before the trade was entered. The framework remains the same whether the market is bullish, bearish, trending, or range-bound. The goal is not to predict where the market might go. It's to follow a repeatable process for day trading futures built around objective price levels, confirmation signals, rule-based entries, and structured trade management. That's exactly what our futures daily key levels indicator and ribbon indicator were designed to provide. Now let's discuss an alternative trade management approach that can be used with these indicators. Rather than exiting 100% of your position when your initial profit target is reached, you can choose to scale out of the trade and continue participating in larger directional moves when market conditions remain favorable. The general concept is straightforward. If the ribbon indicator continues to confirm momentum in the direction of your trade when one of your initial profit objectives is reached, whether that is a 1-level move, 1.5 level move, or 2-level move, you may choose to take partial profits instead of closing the entire position. For example, you might close 60% to 90% of your original position to lock in profits while leaving a smaller runner position open to participate in any continued move. At the same time, you would adjust the stop loss on the remaining contracts to break even or better, ensuring that the trade can no longer result in a loss. As price continues moving in your favor and reaches additional key levels beyond your initial target, you can manage the remaining runner position in one of two ways. Continue holding the entire runner position while progressively raising your stop loss, locking in additional profits as each new level is reached, or scale out of the runner position incrementally by closing one or more contracts at successive key levels while continuing to raise the stop loss on any remaining contracts, locking in additional profits as each new level is reached. For traders who prefer a more passive management approach, an alternative is to utilize a trailing stop. The trailing stop can be set a fixed number of points behind price, or it can be aligned with the ribbon indicator itself. For example, in a bearish trade, the stop could trail just above either the lower yellow moving average or the upper moving average of the ribbon. This allows the trade to remain open while momentum remains intact and automatically exits the position if price begins to reverse and the trend loses strength. This trade management approach allows traders to secure profits at predefined objectives while still maintaining exposure to larger trend-driven moves when market conditions support continued momentum. For example, in today's session, the initial 2-level profit objective was reached at the S2 level during the 9:56 a.m. candle. At that point, the trade had already achieved the minimum target objective for a standard day trade, producing a move of more than 183 points. However, rather than immediately reversing, the bearish trend continued to be confirmed by the ribbon indicator throughout the remainder of the session. Traders who chose to scale out of a portion of their position at the S2 target and retain runner contracts had the opportunity to participate in a significantly larger move as price continued to break through additional support levels. By the 12:44 p.m. candle, price had extended 2 additional full key levels beyond the original S2 target and reached the S4 level at 29,413.25. At that point, the total move from the original entry exceeded 620 points. For traders utilizing the scale-out and runner approach, this illustrates the potential advantage of allowing a portion of the position to remain active while the ribbon indicator continues to confirm trend momentum. Rather than attempting to predict how far the move may ultimately extend, the objective is simply to lock in profits at predefined targets, reduce risk, and then allow the market itself to determine whether additional gains are available. In this session, as an example, bearish momentum continued to be confirmed by the ribbon indicator throughout the day, allowing the move to extend multiple key levels beyond the initial profit objective. By the close of the regular trading hours session at 4 p.m., Nasdaq futures had ultimately reached the S6 level, demonstrating how a trader utilizing a scale-out and runner approach could have remained positioned for a substantially larger move while continuing to lock in additional profits along the way. If you'd like to learn more, you'll find additional videos linked in the description below that cover the complete daily key levels framework, including support and resistance key levels, contextual key levels, daily market structure analysis, and advanced trade management rules. There is also a separate features overview video that walks through many of the advanced capabilities built into the futures daily key levels indicator, including historical review tools, customization options, market structure analysis, and additional functionality that we did not cover in today's trade breakdown. If you're interested in purchasing the futures daily key levels indicator and also the ribbon indicator, we are currently offering a promo code for each that gives you a substantial discount. To request the discount promo codes, simply email us at daytradinggps@gmail.com. Thank you for taking the time to watch today's video. If you found the content helpful, please click the like button and subscribe to the channel so you'll be notified when additional videos on any trading topic are released. And before you go, we're going to leave you with reviews and feedback from traders who have purchased our indicators. Thank you again for watching. For those interested in seeing how other traders are using the indicators and the daily key levels trading framework, here are some reviews and feedback we have received from customers who have purchased and used the indicators. While individual results will always vary based on experience, risk management, and execution, these reviews provide insight into how traders are incorporating the daily key levels indicators into their own trading processes. You can view additional customer reviews and feedback at daytradinggps.com. Thank you.